Good morning, good afternoon, wherever it is in the world that you are. Welcome to the channel. My name's Keith. This is Crypto Bullseye, and we're going to be talking about Ethereum in this video. And I'm going to be doing a heart-to-heart from me to you guys because I said in the last video one thing: Ethereum is going to be the one that runs next and bring the biggest amount of liquidity into the crypto market. Why is that? Over 300 billion just to its all-time high. Hasn't hit its all-time high yet. Ethereum is the next runner after Bitcoin. So that's why I've got my eyes on Ethereum at the moment. I'm going to show you a couple of charts, and I'm going to show you one indicator that is showing Ethereum is hugely oversold right now. Okay, guys, I'm really going to slow it down in this video because I want you to just take a step back and understand that the markets are designed to wreck you. The markets are designed to make you feel this way. And a lot of people, guys, have gone home. I see it in the comments. I don't get many views on my YouTube videos. Not many of the YouTubers get many views at the moment because retailers completely lost confidence. The people that haven't been around from the last cycle are saying inauguration day was the top. Now we're in a bear market, new bear market started. However, guys, there's things on the charts that are telling me different. So that's why I want to show you and explain it step by step, my thesis as to why I think Ethereum needs to be the next one to run. Talked about in the last few videos, Ethereum needs to bring the biggest amount of biggest amount of liquidity into the market cap. That'd be over 300 billion to its all-time high, guys. So 300 billion into crypto is what I'm saying. Just into Ethereum will give such an amount of confidence within the crypto market that then the knock-on effect happens where you go into Solana, you go into the layer ones, then you start going into meme coins, then they start going into AI, and then they start going into all sorts of crap. Market runs, everybody's going up, and then it comes crashing down at the end of it. So that's the alt season, guys. It goes up hard, it comes down even harder, and that's what we're planning for, and that's what we're preparing for. And unfortunately, most of you guys have already discounted alt season, said it's not going to happen. Lots of people are asking me whether I think alt season is going to be cancelled this year. Look, guys, the markets rhyme. They never repeat. If the markets repeated, every single person during the last 4 years would have to be at the chart at exactly the same time, putting in exactly the same buy orders, exactly the same sell orders, and everything would have to be a duplication of what happened in the previous cycle. It's impossible, guys. That's why the markets rhyme, and that's why the markets never repeat. It's a case of on risk, and it's a case of off risk. It's quite a case of quantitative easing, quantitative tightening. What's happening in the world from a macro perspective? There's lots of indications to give us time in the market, guys. I talk about it time and time again. Time in the market. We can't time bottoms. We can't time tops. Tops, bottoms. Can't time tops. Can't time bottoms. You've got more chance winning the lottery, guys. Out of 2,000 people that guess what the top's going to be, nobody's probably going to guess the top. So we can just follow the cycle as far as the business cycle is concerned and understand whether it's a time of risk on, whether it's a time of risk off. And at the moment, it is becoming a time of risk on. We know that 2025 is going to be a year of stimulus. It's the presidential election. He's taken his time. Don't get me wrong, guys. I'm getting bored of this. He's taken his time, but the narrative's still there and the market hasn't crashed. So altcoins are being hit hard. The big players, Bitcoin and Ethereum, are still holding up strong, especially Bitcoin, guys. Absolutely battered it during this bull run. It's run so hard. So in the short term, let's talk price action. We've got Ethereum 2,718. Now we're going to talk about Fibonacci numbers. And I say in my previous videos, Fibonacci numbers work really well and they can give us an indication as to how strong a trend is. Now we're not measuring this trend from the low to the high. We're measuring it from its bull market high to its bear market low. What we say is a 38.2% retracement and a reaction from a 38.2 indicates that this downtrend is still strong and you'd expect a continuation to the downside. If you come back up to the 618, that's a healthy pullback, 61.8% of the previous move, and a rejection from that. That would be healthy. However, when you start making up these levels to the 786 and beyond, that's showing that the bulls are grinding up and the bulls are grinding up and they're managing to get past these levels where there's loads of sell orders, loads of sell walls, and they're managing to push price through. And it didn't do it once, didn't do it twice, done it 3 times. So we've rejected at the 786 3 times. However, we've hit the 786 3 times. And that's going to be the aim of the game in the short term. $4,000, a big round psychological number. It was 78.6. See how these things work, guys. 786 fib, 4,000, round number, sell, sell, sell. That's what happened, guys. But the more that you get the sell orders, the more that the buyers push and test the sell orders, the more chance that they've got to get through because they're eating away until there's less sell orders and the buy orders start outweighing the sell orders. That's when you get a breakout. So remember that, guys. It's not just candlesticks. We can read candlesticks and we can understand what's happening behind a chart by looking at candlesticks at any given time. But it's people putting in buy orders and people putting in sell orders. When stuff like this happens, 2nd of February, what happened on 2nd of February? I don't know. I'm not a fundamental guy. Go back and check the 2nd of February. Something bad happened that created fear in the market. And the 3rd of February as well, guys. Something created fear in the market. And by the end of the day, let me just zoom in on this. Something created fear in the market. And by the end of the day, there was no fear in the market because the bulls had pushed price all the way back up again. So go back and look at news events. When you see these big red candles and you see these big red candles, people are feeling rubbish, guys. When you see a red candle, there's no positive news. A war hasn't ended. Nothing good in the world's happened. When you see a red candle, that's showing fear from a macro perspective. Okay, what we want to do is look for, we're going to get onto the rainbow chart, guys. I want to show you the rainbow chart very shortly, but we're just going to get over price action and what needs to happen in the short term for Ethereum. Because the aim of the game in the short term is to take out this 618 so it can go back and test the 4,000 at the 786. 618 is sitting at 3,332. So as far as the stochastic's concerned, we're a bit overbought now. So you could potentially come back down here. And the aim of the game, guys, this is important. The aim of the game, when your stochastic has come back down into an oversold level, you want to be putting in a higher low on the chart. That's showing that the indicator's reset back to overbought. You're at a higher low. You're at a better position. Then the next swing can give you more volatility to take out this previous high here. So that's what we're looking for in the short term. I've got any indications that's going to happen. Got one indication. We've got this down here, guys, RSI breakout. So just stick a trend line on here. Just stick a trend line on here. You can see the RSI is trying to break out now. Let me zoom in on this. It's trying to break out now. So the RSI, it measures buying and selling pressure, buying and selling volatility. And you can use the RSI to front run as to what price action's doing on occasions. It's one of the most well, it's not a lagging indicator, should I say. It's one of the most real-time indicators. So I do like to use the RSI in conjunction with the stochastic. Stochastic is very lagging in comparison, but it's very easy to use, very easy to understand whether you're overbought, whether you're oversold at any given time. So the RSI breakout is showing that the price action is front-running what actual price on the chart is doing. Sorry, the pressure from price action buying and selling is showing that the chart needs to catch up. The chart needs to come back to this trend. We broke out trend there. The chart needs to come back. So like I say, that's the aim of the game in the short term. Just have a quick look on the weekly to find out if we're overbought on the weekly. And look at this, guys. Higher the time frame, higher the conviction. At the end of the week, it looks like we're potentially going to get a stochastic cross and then another turn to the upside. Now, with this being the weekly, how long do you think that's going to last, that move? Let's measure that. Just an example, if it was this long. That's going to be about 14 weeks. So for the stochastic to come into an overbought position, it's going to take about 10 to 14 weeks. So that's what I'm saying, guys. That's about the same time as what I've given myself for alt season. It's about the same time it takes for this stochastic to come from oversold to overbought. So that's the first couple of clues. The next thing that I wanted to show you was the rainbow chart, guys. So this is the Ethereum rainbow chart. This is the logarithmic scale. And you can see it's split into different colors of the rainbow. Now, let's go through this quickly and zoom in on that. So you've got dark red. The Ethereum market is extremely overextended. ETH price is likely to drop. So this is fear, dark red. Red, Ethereum's overbought. Traders should consider taking profits. Then you've got dark orange. As it gets lighter, buyers are dominating the market. FOMO, fear of missing out, is building up. So orange is where FOMO starts kicking in. You've got light yellow, which is a balanced market. You've got yellow, investors should hold their Ethereum. So that's a hold signal. You've got light green, Ethereum can be acquired very cheap. Green, a good spot buy for accumulate. And you've got light blue, a very good ETH buying opportunity. And then you've got blue, which is the highest one. Ethereum is extremely undervalued. So when you zoom in to find out exactly where we are in Ethereum, you can see that we're in green territory. So we're in green territory, yellow territory. So that's signaling green, a good spot for accumulating a Bitcoin position. Light green, Ethereum can be acquired for relatively cheap. So it is at the point where Ethereum can be acquired at relatively cheap. And when we look at the chart, we know exactly on the stochastic RSI on the higher time frame, i.e. the weekly, that we're massively overbought. Rainbow chart's showing us it's a strong buy at the moment. The market cycle looks fine to me, guys. The market cycle looks fine to me. People are asking, do I think that the market cycle is going to be cancelled? Do I think alt season is going to be cancelled? Guys, just look at total 3. Look at total 3. Yeah, we've got more different variety of cryptocurrencies. We've got millions more cryptocurrencies now, so you'd think it's going to be a spread of liquidity. However, the overall combined market cap going into crypto does need to break and test its all-time high and then move forward. I can't see any reason why it wouldn't, guys. There's nothing changed as far as Ethereum's concerned, Solana's concerned, Sui's concerned, Phantom's concerned, AVAX is concerned. All these big players in the market that are integrating things into real time, especially Ethereum with all its ETFs. Can't see that it's bearish, guys. I can't see that it's bearish. So what I'm saying is the markets are designed to make you question yourself. The markets are designed to make you complacent. And what will happen, guys, what will happen time and time again, especially for people that are new to crypto, you're going to feel two things. You're going to feel like capitulated, taking out that little amount of money that you've got at these low levels, market will reverse, and you'll take that little bit of capital that you've got, and you'll put it in at higher levels, guys. One of two things can happen. That can pull back. If it pulls back, it's even less of an amount that you've got. Or the other thing that keeps getting people is the rotation of one crypto to another crypto. And that's created by narratives within the crypto market. So you get the AI narrative, you get the meme coin narrative, you get all these different real world assets, you get all these different narratives. And it's designed to make people think that their narrative is the one that's not running. They need to go into the one that's running. So just an example, if you went from meme coins to AI, your meme coins have took a hit. Your meme coins have took a hit, and then the AI narrative's running. So you are taking a big loss, say 80% loss in your meme coins. You're taking the 20% left that you had out your meme coins, and you're putting it into something that has pumped. Now, what happens when something's pumped, guys? Pulls back. So that 20% that you had out of the 100% from the previous trade, you put it in there, that drops 50% after a big, huge pump. That means you've got 10% of capital, and it's going to make you feel crap, and it's going to make you feel like you want to come out of one thing and come out of another thing. So remember, from a tax implication, guys, crypto to crypto is a tax and implication. So if you're going to keep rotating, keep rotating, keep rotating, you need to be thinking about that too. We're going to be talking about tax a lot more in future videos. And I've managed to hook up someone, guys, that is going to be very important for the channel. And I'm just in further discussions to find out what we can do, how we can work together. And it's going to be benefit for each and every single one of you that's watching this, because tax is something that applies to everybody, something that confused me, and these guys that I'm talking to are making things very, very easy. So I'm going to try and negotiate something with them. It's not a promise, guys, but I want to try and build things within the community that are going to benefit the community, not leverage trading, not things that are going to wreck the community, but things that are going to save wealth. So I hope you enjoyed the video, guys. A bit of a long-winded one, but I just want to bring calm to the community and just understand that the cycles look good to me, guys. The dollar looks weak. The dollar looks like it's going to shit the bed, guys. The DXY looks like it's going to shit the bed. Things look good as far as that's concerned. We just need that weak dollar. We need a catalyst, and we need something to happen in the world from a macro perspective that is just going to create that surge, create that confidence. Once the weak hands are flushed out and we've just got holders remaining, what happens? Hold, price goes up, price goes up, price goes up. That's why you get your bull markets. So guys, let me know in the comments what you think of this video. Do you want me to slow it down a bit going forward in future videos? And did you prefer this style? I'll see you in the next one.